Hello, everyone, and thank you for joining today. My name is Brandon Whitehurst, and this presentation will cover my analysis of the Coca-Cola Company statement of cash flows for the fiscal year ending in December 31st, 2024. Purpose of this analysis is to highlight the company's major sources and uses of cash, explain how operating cash flow differs from net income, and identify key financial strengths and weaknesses based solely on the cash flow data. All right. So those are the objectives. All right. So let's start with the major sources of cash. In this operating section, Coca-Cola's two largest sources were net income, which totaled 10.7 billion, and depreciation and amortization, which added back 1.4 billion in non-cash expenses. These are typically for a company with large physical assets. In the investment section, Coca-Cola generated cash from sale of assets such as property and equipment, amounting to around $500 million. We also saw cash inflow from reduction in investments at another 400 million. In the financing section, come to see 3.6 billion from proceeds of borrowing and an additional 200 million from stock um, issuances. My apologies. These help fund operations or repay existing debt. The major uses of cash. When we look at the major use of cash when it comes to Coca-Cola from operating standpoint, cash was used primarily for working capital adjustments, such as changes in receivables, inventories, and deferred tax expenses. In the investing section, the company spent 2.5 billion on new investments and 1.7 billion on capital expenditures. This includes things like new bottling equipment or manufacturing products. In the finance section, major uses of cash also include dividends paid to shareholders totaling a significant $7.8 billion. And the repayment of debt, which amounts to 2.9 billion, these uses suggest Coca-Cola's return in value to shareholders and managing its debt position very carefully. Net income versus operating cash. Just here, I want to explain the key difference between net income and cash from operations. Coca-Cola reported 10.7 billion net income, but cash from operating activities was higher, which was 11.7 billion. Difference is due to several reconciling items, which include the depreciation and amortization, non-cash expense, and back 1.4 billion. Stock-based compensation, which added about 400 million, and changing in working capital that also played a role. These adjustments are necessary because net income is based on accrual accounting, which includes non-cash items. The cash flow statement provides a clear picture of actual cash that the company would generate. The financial strengths. One of Coca-Cola's greatest financial strengths is a strong cash flow from operation that totals $11.7 billion. Not only does it cover dividends and capital investment, but it also reflects solid profitability and operational efficiency. Additionally, the company shows a consistent ability to manage working capital, indicating a strong control over day-to-day finances. Overall, Coca-Cola appears to be well-positioned to continue generating reliable cash flow in the future. And something that's going to be essential for funding growth, repaying debt, and maintaining investor confidence. Financial weaknesses. On the downside, Coca-Cola has significant cash outflows in its financing activities, especially through dividends and debt repayment. While paying dividends is attractive to investors, it also reduces retaining earnings and limits flexibility. Additionally, additionally, capital expenditure are relatively high at 1.7 billion. While this reflects investment in the business, it could also pose a challenge if cash flow from operations declines in the future. Continued borrowing might be necessary if large outflows persist, especially in a tight credit environment. Um, um, in conclusion, Coca-Cola's statement of cash flow shows a well-managed business with healthy cash flow inflows from core operations and clear commitment to returning value to shareholders. The company does face some pressure from high financing outflows, but overall, its strong operating cash flow suggests continued financial strength. Thank you again for your time. I'm happy to take any questions if needed.